Welcome. Today we're diving into a hot topic in the crypto world. Why do altcoins often pump much harder than Bitcoin? If you've ever watched the markets, you've probably noticed that while Bitcoin moves, some altcoins can skyrocket by hundreds of percent in a matter of days. This video will break down the key reasons behind these explosive moves, compare altcoins with Bitcoin, and help you understand the unique dynamics at play. Let's start by looking at what sets altcoins apart from the king of crypto, Bitcoin. One major reason altcoins pump harder is their smaller market capitalization compared to Bitcoin. Bitcoin is the largest cryptocurrency by far, so it takes a lot more money to move its price. In contrast, many altcoins have much smaller market caps, meaning even a modest influx of capital can send their prices soaring. This makes altcoins more volatile and more susceptible to dramatic price swings, both up and down. Liquidity plays a huge role in how much a coin's price can move. Bitcoin has deep liquidity with millions of dollars traded every minute. Altcoins, especially those outside the top 10, often have much thinner order books. This means that a single large buy or sell order can have a massive impact on price, causing rapid pumps or dumps. Lower liquidity amplifies price movements, making altcoins more prone to wild swings. Speculation is a major force behind altcoin pumps. Many traders are drawn to altcoins because of their potential for quick, massive gains. Hype, rumors, and social media buzz can quickly attract attention, leading to a surge in buying. This speculative demand can create a feedback loop where rising prices attract more buyers, pushing prices even higher in a short period. Social media platforms like Twitter, Reddit, and Telegram have a huge influence on altcoin prices. Viral posts, influencer endorsements, or trending hashtags can spark sudden interest in a particular coin. This can lead to rapid price increases as traders rush to buy in, hoping to catch the next big pump. The speed and reach of social media make altcoins especially sensitive to online sentiment. Altcoins often have lower prices per coin compared to Bitcoin, making them more accessible to new investors. Many people are psychologically drawn to owning whole coins rather than fractions, so they gravitate toward cheaper altcoins. This lower entry barrier can attract a larger pool of retail investors, increasing demand and fueling price pumps. Many altcoins are built around new technologies or unique use cases such as DeFi, NFTs, or blockchain gaming. When a new trend emerges, coins associated with that trend can experience explosive growth as investors rush in. These hype cycles can create massive pumps, especially when combined with strong marketing or community support. Despite their differences, altcoins often follow Bitcoin's lead. When Bitcoin rallies, it can create a bullish environment that lifts the entire crypto market. However, once Bitcoin's move slows, traders often rotate profits into altcoins, seeking higher returns. This rotation can trigger powerful altcoin pumps, especially during strong bull markets. Crypto exchanges play a big part in altcoin pumps. When a new altcoin gets listed on a major exchange, it often experiences a surge in price due to increased visibility and access to more buyers. Exchange listings can act as catalysts, drawing in new investors and creating a wave of buying pressure. Unfortunately, some altcoin pumps are artificially orchestrated through pump and dump schemes. Groups coordinate to buy a coin, drive up the price, and then sell at the top, leaving latecomers with losses. These schemes are more common in low-cap altcoins and can cause extreme volatility. It's important to be cautious and recognize the risks involved. Design of an altcoin's tokenomics, how coins are distributed, supply limits, and incentives can greatly influence price movements. Coins with limited supply or strong staking rewards can attract more buyers, increasing demand and driving up prices. Understanding tokenomics is key to predicting which altcoins might pump harder. A strong, active community can make a huge difference for an altcoin. Communities drive awareness, organize marketing pushes, and create a sense of belonging among holders. When a community rallies behind a project, it can generate significant buying pressure and help sustain price pumps. News of new partnerships or collaborations can send an altcoin's price soaring. Investors often see partnerships as a sign of legitimacy and future growth potential. Even rumors of big-name collaborations can spark a buying frenzy, leading to sharp price increases in a short time. Fear of missing out, or FOMO, is a powerful motivator in the altcoin market. When prices start to rise quickly, more people rush in, afraid they'll miss the next big move. This creates a self-reinforcing cycle where buying pressure pushes prices even higher, often far beyond the coin's fundamental value. Influencers and celebrities can have a dramatic effect on altcoin prices. A single tweet or video from a well-known figure can bring massive attention to a project, causing prices to spike as followers rush to buy in. This effect is especially strong for smaller, lesser-known coins. Many altcoins are available on derivatives platforms, allowing traders to use leverage. Leverage amplifies both gains and losses and can lead to rapid price movements when many traders are betting in the same direction. Liquidations of leveraged positions can cause sudden spikes or crashes, adding to the volatility. Some altcoins have a low circulating supply or float. When demand increases, there simply aren't enough coins available for everyone who wants to buy. This scarcity can drive prices up rapidly, especially if the project is gaining attention or has a strong narrative. Regulatory news can have an outsized impact on altcoins. Because many altcoins operate in legal gray areas, any hint of regulation, positive or negative, can cause sharp price movements. Traders react quickly to news, leading to sudden pumps or dumps depending on the perceived impact. Major upgrades or new features can spark excitement and drive up an altcoin's price. Announcements about improved scalability, security, or new partnerships often lead to increased buying as investors anticipate future growth. These technological milestones can act as catalysts for strong price pumps. Price differences between exchanges can create arbitrage opportunities. Traders buy altcoins on one exchange where the price is lower and sell on another where it's higher. This activity can cause sudden price spikes as traders rush to exploit the gap, especially in less liquid markets. Airdrops and incentive programs can generate buzz and attract new buyers to an altcoin. When a project gives away free tokens or offers rewards for participation, it can create a surge in demand. This increased interest often leads to price pumps, especially if the incentives are generous or widely publicized. Algorithmic trading bots are common in crypto markets and can amplify altcoin price movements. Bots react to price changes, news, and technical signals, sometimes causing rapid pumps as they buy in response to momentum. This automated trading can make altcoin markets even more volatile. The more people use or talk about an altcoin, the more valuable it can become. This is known as the network effect. As adoption grows, so does demand, which can lead to rapid price appreciation. Altcoins with strong network effects often experience the biggest pumps during bull markets. Human psychology plays a big role in altcoin pumps. When people see others making money, they want to join in. This herding behavior can lead to rapid inflows of capital, pushing prices up even further. The fear of being left out can override rational decision-making, fueling even bigger pumps. Mainstream media coverage can bring massive attention to altcoins. Positive news stories, interviews, or features can introduce a coin to a wider audience, sparking new waves of buying. Media attention often acts as a catalyst for price surges, especially for coins with compelling stories. Many traders use technical analysis to spot breakout patterns in altcoins. When a coin breaks through key resistance levels, it can trigger a wave of buying as traders pile in. These technical triggers often lead to sharp short-term pumps, especially in thinly traded markets. During certain periods known as altcoin season, money flows out of Bitcoin and into altcoins. This rotation can cause many altcoins to pump simultaneously, often by huge percentages. Altcoin seasons are driven by a combination of profit-taking, speculation, and market sentiment. Altcoins are riskier than Bitcoin, but with higher risk comes the potential for higher reward. Many investors are willing to take on this risk in hopes of outsized gains. This appetite for risk fuels speculative buying and contributes to the dramatic pumps we often see in the altcoin market. While altcoin pumps can be exciting, it's important to remember that what goes up can come down just as quickly. Extreme volatility means prices can crash just as fast as they rise. Always do your own research and be aware of the risks before investing in any altcoin. To wrap up, altcoins pump harder than Bitcoin for a variety of reasons. Smaller market caps, lower liquidity, speculation, hype, and unique tokenomics all play a part. While the potential rewards are high, so are the risks. Understanding these dynamics can help you navigate the altcoin market more wisely. Thanks for watching and stay informed as you explore the world of crypto.